Hello, social media. Good to see you again. Suzanne McMahon here with eXp Realty.
I'm Jason Black with People's Home Equity Transaction Coordinator.
Hey, and it's me again, Sean Cutchins, the mortgage loan officer with People's Home Equity. Today, we are excited to talk to you a little bit about a subject that seems to be coming up, and that is, should I wait to buy a house? So we've titled this one, The Cost of Waiting to Buy. All right. So, what are the reasons why we might want to rent or we might want to buy? What really are the benefits? Why do Jason and Suzanne and myself get out here, make these videos, work hard to find people homes, work hard to get them the financing? What is in it for you?
And Sean, before we dive into this, I've been around the finance world for a little while, and I've always heard that not everybody should buy. What are your thoughts on that?
So I think that's an interesting statement, because I think that a lot more people qualify to be homeowners and have the ability to be homeowners maybe than they realize. I think also there are people out there that don't understand what it really is going to take to get into a home and are not truly prepared at this time to be homeowners. And so I don't know that there is a blanket statement for that. But I think that that's where getting with a mortgage professional, getting with a realtor, looking at where you sit financially, looking at your credit, looking at the overall big picture. And then today we're going to show you what those benefits might be. And so you can ask yourself, do I feel like I'm in a position to take on the responsibility of buying a home and that it's worth all the benefits that are going to come with it?
And let me throw a follow-up to you two. How often do you guys hear things like, wow, I didn't think I would be able to purchase a home? Is that a fairly common phrase?
I'll kick it over to Suzanne, but I'll quickly say, yes, I hear that all the time. Wow, I had no idea that I could do this. And you get a lot of people that are renting and stay that way because they just don't think they have the ability, or that they don't realize the tools are out there to help them get there. Suzanne, what about you?
I know I bought my first home that way. And, if I hadn't met with my realtor and she got me associated with a lender, I would never have known that I could buy a home with no money down. So that was exciting for me.
Yeah, and I think that maybe sometimes there's a misconception that you can get in all the time with no money down, and that's not always the case. But there's some programs out there that if you have the right realtor getting you concessions and you have the right down payment assistance programs, you can get in a lot cheaper than you think. Sometimes, though, I think people don't realize that maybe if you've got a lower credit score and you don't really have any money in the bank, then we're going to have some work to do. But that's where a mortgage professional and a realtor will work with you, set up a plan, and show you how we can take you out of renting and into the benefits of buying. So.
Awesome. Thank you.
All right, well, let's talk about, I think what's probably the most shocking statistic that I have seen over the last 12 months, and that is the increase in rental costs, as well as the decrease in rental opportunities. It's the supply and demand. Rent has increased by $500 compared to the previous year. And I don't know about the rest of you guys, but I am absolutely shocked at what people are paying right now for rent. The average rent is right around $1,450 a month. And it, to me, is absolutely, it's absolutely crazy, especially compared to what you can buy a house for.
That's right. No, I have a client who recently said, I would have paid $300 more per month than I would in a home renting. So it's saving him quite a bit, and he could put that toward paying off his car.
Oh, wow. Yeah. That's the thing too, is a lot of times you don't think about, well, I've got the responsibility of maybe a little bit higher house payment because I was paying $1,350 for rent. And now I'm going to pay $1,400 for a house. But then, you've got the whole building of the equity, and you'll hear us talk about that in just about every video about the importance and how much that truly means to your assets as you build equity. So with that, Jason, if you'll flip to the next slide though, I think the one thing that I really want to emphasize is that when people say is now a good time to buy, well, in January 2022, you look at these two examples. If you paid $10,000 over asking price, and Suzanne, I know you can vouch for this, and Jason as well. I saw people paying $20,000 and $30,000 over asking price fighting for houses. We've
And they
seen
wouldn't even get it.
yeah. And we've seen that level off tremendously over the last probably 5 or 6 months. But if you paid $10,000 over at 4% interest with 5% down, estimated closing costs of around $5,500. Again, understanding these are just some generic numbers we've put out there. Every situation is going to be different, but you're looking at a payment of about $1,150. Now, if you ask asking price and you get asking price, you get 3% in seller concessions. You got a 6% interest rate, 5% down. Let's say you can get to the estimated closing cost of 0 with seller concessions, some other programs. Again, doesn't always work that way, but for the sake of argument, we're going to call it that. You're looking at $1,382. Even if you did have a little bit of closing cost, $1,400. We just said the average rent was $1,450. To me, you're still looking at not only saving a tremendous amount of money overall, because you're not paying over asking price. If you think about it, if you paid $10,000, $20,000, $30,000 over asking price, that's it. That money's gone. At 6% interest right now, maybe that's not the rate you want to see. But if you look at our other video where we talked about how rates trend up and down, you got a pretty darn good chance that before long, you're going to have the opportunity to refinance that. Well, refinancing, it's going to save you money. You can even drop the term. But if you pay more than asking price right now, that's gone. And that may be what you need to do in some cases to get a house of high value. But overall, I think now is a better time to buy than it was 12 months ago when the rates were a little bit lower.
That's right. So, jump on right now and you can refinance later. And yes, those seller concessions really are kicking in. Just last week, I sold a home and the man got $5,500 in seller concessions for repair. He got a home warranty. So, a lot of people seem to be afraid of the rates, but, you're getting some good seller concessions right now.
Well, and even
Yeah.
look at this slide, Jason, you're talking about $200. But when you look at $10,000, $20,000, $30,000 over asking price, how long does it take before, that's caught up with itself? And by then you would have refinanced.
Absolutely. And, it's not the, certainly the exception and not the rule. But like you said, we did a loan, closed on it last week, and they went through the down payment assistance, one of the down payment assistance programs we offered. And because of the seller concessions they got the keys to their house at closing, and they left with a check. So
Yeah.
they got all the money they'd put back in it, no out of pocket for appraisal. And that's, that really speaks to the seller concessions, because that coupled with the down payment assistance, and there was a surplus. So they got the money they invested back.
Yeah. And it's again, does that happen every time? No. But can it happen? Absolutely. And so I think that goes back to what you'll hear me say over and over and over again. You cannot make assumptions. You've got to get with your real estate professional and with your loan officer and really dig into what your situation looks like. You may have more of an uphill battle than you think, or it may be even easier than you think to get into a house. But what we think and what we'll know once we actually can get in the throes of things, two different stories. And I always want to know where I'm at so we can formulate a plan and move forward. Now, Jason, if you'll move to the next slide, I think this is the one that stands out and gets me the most excited when I think about the monthly payment breakdown. You got to ask yourself, am I really looking at the difference in interest of 4% to 6% with this, is it really that overwhelming? $200, $250? I don't think so. When you look at this next slide, this is the one that I think a lot of people don't think about. And that is 4%, 6%, or when you rent, it's 100% interest. Every single penny you pay into someone else's pocket. There's a reason why that rental game has been strong for years and years and years, because people are making money off of you. And every penny that you pay guess what it's building for someone else? Equity. The one thing that we've said in all of our videos is that one of the greatest assets to being a homeowner is building equity. There is
Yes,
no,
I was gonna say, when I bought my house, it has space, it has more land, it doesn't need all these repairs. But when I show a home, that's in the same price range that what I paid when I bought mine, you have all these repairs, you have less space, you have, less square footage, less acreage. So every time I show a home in that price range, I think to myself, wow, I'm glad I bought a house when I did.
yep. And people that buy today will be glad 3 years from now that they bought a house when they did, because it's not as if real estate's going down, right? And so I think when you look at, if you pay $1,000 a month for rent, just say you got lucky and it was $1,000 a month for rent. At the end of the year, you've paid $12,000. And if you move out, you lost $12,000. You pay that same $12,000 into your house and you move out, some of that has gone to your equity. And the longer you go, the more it goes towards your equity. So never forget that renting is a Band-Aid. It doesn't do anything for you financially. It just gives you a place to stay as long as you're there. And when it's gone, it's gone. There's nothing to show for it. Again, I'm not knocking renting. I'm just saying that when you look at asset building, there is none when it comes to renting a place. So
Absolutely. Yeah, and this is the one that gets me excited. This, when you look at renting, and back to that trend of data we showed a moment ago. So 1,500 per month renting at 100% interest, and that's no insurance coverage. In the event of a disaster, your house catches on fire, unless you've got additional renter's insurance, then you're toast. And it may be that the homeowner has insurance, but most likely you're not gonna be protected under their policy, and it builds no equity over time and does not increase your net worth. And on the other end of the spectrum, you've got a $200,000 house, estimated payment. Estimated payment of $1,382, and that includes homeowners insurance. So that is a protection for you. So that should be weighed in the difference. And it's building your net worth. And being in the finance industry, that's where people, if most of the people you talk to, how did you start building your wealth? Real estate. And how do most people start their real estate ventures? Buying their first home. It is by and large the most common way that people contribute to a positive net worth is through home ownership.
yeah, I'll tell you, Jason, you'll laugh at this, but that very first house I bought that I told you guys I paid on a previous video, I paid 9% interest for the house. It was a 3-story townhouse. I thought I had moved into the Taj Mahal because we were coming out of a small apartment. And we really had only gone up, as I recall, about $100 a month at the time in the mid-90s. And we bought the house. We paid $98,000 for it. We stayed in it for 3 years. And when we moved out, it was worth $117,000. And I thought I had hit the jackpot, making that extra $15,000, $20,000 in equity. But I was able to take that and now make that part of my down payment on my next house, which was a little bit bigger. But to give you an example, when everything was going up here recently, I actually went on Zillow and I looked at that same townhouse that I had bought for 98, sold for 117, and it was now listed or had most recently sold for $275,000. And so it's just ridiculous to me how much, asset and net worth wealth it has the opportunity to bring you when you start that process and stick with it. So,
And it's true. Same here. When I purchased my house, versus, and I purchased my house in 2019, versus I'd say 2021, when I refinanced and had a new appraisal done, and my house had more than doubled in value. And it's, not because of anything wonderful that I did, other than that I just owned it. And and the market changed. And another thing I think is worthwhile is, Sean, you mentioned, and Suzanne had mentioned refinancing. And so a portion of this payment is private mortgage insurance. And, you know, what happens to my private mortgage insurance when I buy my house in 2019 and then refinance in 2021, and it's worth more than twice what I bought it for? Is I'm under 80% loan to value now. So there goes another $45 off my payment too.
It's a snowball effect on all of it. So
That's right. And at what point does the PMI go away?
so when you're at a 80% loan to value, you can request it. Almost all places, once you hit 78, they'll automatically do it for you. But essentially, if you have just for the sake of the math, if you have $100,000 home and you now owe $79,999, you can request for it to be removed. Sometimes because the value's increased and you don't realize it, you're already under 80%, but you can get the PMI insurance removed below 80% loan to value.
Wow. Yes. Well, so we have 6 reasons to buy here. And so, you know, I've rented, I've bought. I can tell you, it's wonderful. It's happiness when you have a house because you can paint, you can make the yard how you want. You don't have to worry about a landlord calling you to, you know, you don't have to worry too much about neighbors. If you want to live out in a rural area, you can, or, you know, if you want to have neighbors close to you, you can do that. So many choices with having a home, and tax savings. Every year you get to write off the mortgage money that you paid in and get savings.
And for the sake of argument, let me go ahead and say we're not tax professionals. Please consult your tax professional, as we don't want to claim that we know exactly what your tax savings would or could be, but there's obviously a lot that goes along with that. And with the right tax professional, you'll find that you should be able to get some savings.
That's right. And, you know, appreciation and equity, those go hand in hand. You know, your home is going to come in value over the years. We saw the ups and the downs of the market over many years in our last video. And so you can expect that over time, you're going to gain some equity. And, you know, if you have children, it's wonderful to give them roots. You know, there's lots of reasons to buy beyond these points here, but, you know, I'm so glad that I did. I'm sure you're glad, Sean and Jason.
Oh, yeah.
Yeah, absolutely. And I think the biggest thing is, you know, whatever your reasons to buy, you know, awesome. But we definitely want to make sure that your reasons not to buy are not exclusively that you don't think you can.
That's right. So get with a realtor, get with a lender, get with us.
There's no reason why. I think one thing that is more frustrating to me when I talk to someone who says, well, I tried 12 months ago and I didn't qualify. And I'll say, well, what kind of plan did your loan officer put together with you to make sure that you qualified today? And they said, nothing. They just told me I didn't qualify. And I'm like, well, we're going to be in the same boat. And so that's where on our previous video, we talked about tools that we have to help you, show you what it's going to take to get there. I think the biggest thing is don't make assumptions. You just don't know till you know. And that's where having people you trust and having people that have been in the industry a long time can really be an asset for you as well. So, but excited to be able to share this because I think we're at a good point. And I think from what we said in the very beginning, is this a good time to buy? Absolutely. It absolutely is. I don't think there's any bad time to buy. Some might be better than others, but I think we're in a nice even area right now on both sides, buying and selling.
And I feel like we're a great group. We work well together and we've done so many transactions together. So if you're looking for what you can trust, it would be us. I really feel that way.
Yeah, and
absolutely. And to speak to what Sean was saying a moment ago, you know, we've got a sort of a principle that's guiding for us, and the principle is it's never a no. You know, occasionally we'll have a not now, but it's never a no, and we're always committed to doing what we need to do to get the ball down the field and in the end zone.
That's right.
Jason, if I could get my wife to have that same philosophy when I want to go fishing, you know, may not be a no, but just not now. I get a lot of no's. So
That's right. We work with all kinds of people, you
That's
know,
right.
investors, people who have rented, first-time home buyers, VA, lots of different types. So reach out.
Yes, for sure.
So here's where you can reach us. Please give us a subscribe, like, and write any questions that you have. Don't hesitate to ask. We'd love to hear your questions so we can answer them in another video.
Yep. We'll see you guys next time. Thanks for your time.
Absolutely. Thank you, guys.
Thank you.